It's the midweek edition of Business Morning on Channels Television. Good morning and welcome to 55 minutes of current and relevant business conversation. And you're doing it with me, Amy John Mekwa. Well, let's start off now with oil prices. It's edged down on Wednesday, extending a 1% drop in the previous session, as worries about China's struggling economy outweigh declining U.S. stockpiles. Brent crude futures slipped 38 cents to $84.51 a barrel, while U.S. West Texas Intermediate crude declined 35 cents to $80.64 a barrel. Both benchmarks had weakened to their lowest since August the 8th, and that was on Tuesday. U.S. crude stocks dropped by about 6.2 million barrels last week, according to market sources citing American Petroleum Institute figures. And that was a much bigger draw than the 2.3 million drop analysts had expected. Still on that, U.S. government data on inventories is due later on today. Meanwhile, China's economic activity data for July remains the key bearish market driver after retail sales, industrial output, and investment figures failed to match expectations, fueling concern over a deeper, longer-lasting slowdown in growth. The July activity data has prompted some economists to flag risks that China, which is the world's biggest oil importer, may struggle to meet its growth target of about 5% for the year without more fiscal stimulus. Beijing cut key policy rates to shore up activity, and some analysts are hoping that more stimulus measures will be implemented soon to jolt the economy and support demand for commodities such as oil. Still talking oil, but edible now, Malaysian palm oil futures edged up for a second straight session, supported by a surge in exports during the first half of August, production worries and weakening ringgit. The benchmark palm oil contracts for November delivery on the Bursa Malaysia Derivatives Exchange gained 13 ringgit to 3,818 ringgit. That's about $823 per metric ton by midday. A weakening ringgit and slower production growth for the first half of August is Peninsular Malaysia was the catalyst behind the massive price rally lately, according to some observations there. Exports from Malaysia during August the 1st to 15 rose 18.9% from the same period in July, and also top producer Indonesia said its crude palm oil reference price lower at $820 per metric ton for August the 16th to the 31st. Grains now, see what's happening there, and Chicago corn edged higher on Wednesday with a round of bargain buying supporting prices after the market dropped to its lowest since December 2020 on expectations of bumper U.S. production. Wheat inched higher, recouping some of the losses triggered by ample supplies from Northern Hemisphere harvest, while soybeans also climbed. Wheat inched higher, and the most active corn contract on the Chicago Board of Trade was up 0.3% at $4.77 a bushel after hitting its lowest since December 2020, which was $4.73 for half a bushel. Expectations of ample supplies weighed on corn prices. For wheat, it gained 0.2% to $6.24 for three-quarters of a bushel, having dropped early on Wednesday to $5.91 for half of a bushel, and that's its lowest since May the 31st. Soybeans rose 0.6% to $13.13 for half of a bushel. The U.S. Department of Agriculture's weekly crop progress report, issued after trading ended on Monday, rated 59% of the corn crop as good to excellent, and that was up from 57% a week ago and above what analysts expected. The USDA also rated 59% of the soybean crop as good to excellent, a jump from 54% a week ago. With prices are being weighed down by harvest pressure in the Northern Hemisphere, although any disruption to the Black Sea supplies due to the Russia-Ukraine war could support the market. We come to Nigeria now. The latest data from the National Bureau of Statistics shows that headline inflation rate for the month of July has risen to 24.08% compared to 22.79% that was recorded in June. We have this report and it captures more details from that report.
For some time now, the nation's rising inflation rate continues to dominate discussions among Nigerians, leaving the government with the option of seeking for ways to address the challenge. Since the earlier rate of 22.79% in June 2023, which rose up from 22.41% in the previous month, was nothing to worry about, the nation's current inflation rate now stands at 24.08%.
To domestic prices will thus require...
The acting governor of the Central Bank of Nigeria had predicted this at the last Monetary Policy Committee meeting, citing the Russian invasion of Ukraine and other global shocks as a reason for the rise.
Inflation across several advanced economies has continued to moderate, but remains considerably above their respective long-run objectives, even as monetary policy tightening progresses. In the emerging markets and developing economies, inflationary pressure remains broadly elevated, though there are signs of moderation in some countries. Global inflation is thus expected to remain elevated through 2023, despite broad measures by several central banks to ease the pressure.
The National Bureau of Statistics, in its latest report, gives a sectorial breakdown of the new rate. They include food and non-alcoholic beverages, housing, water, electricity, gas and other fuel, clothing and footwear, transport, furnishings and household equipment and maintenance, education and health. Others are miscellaneous goods and services, restaurants and hotels, alcoholic beverages, tobacco and cola, recreation and culture, and communication. Also, the report shows that food component sub-index increased by 26.98% on a year-on-year basis, which was 4.97 points higher relative to the rate recorded in June 2022. The report states that the rise in food index on a year-on-year basis was caused by increases in prices of oil and fat, bread and cereals, fish, potatoes, yam and other tubers, as well as fruits, meat, vegetable, milk, cheese, and eggs. On state profile analysis, the report shows that in July, all items inflation rate on a year-on-year basis was highest in Kogi at 28.45%, followed by Lagos at 27.30% and Ondo at 26.83%. It, however, states that the slowest rise in headline inflation on a year-on-year basis was recorded in Borno at 20.71%, followed by Jigawa at 20.85% and Sokoto at 20.92%.
So there you have it. Inflation number for July is out, so 24.08%. Let's drill down on this with Mr. Ayode Jibo, the Managing Director of Optimus by AfriInvest, joins us virtually from Lagos. Mr. Aibo, good morning, and thank you for your time.
Good morning, and thanks for having me.
So 24.08%, can we say the worst is over? We were still expecting more.
I won't say the worst is over. We know the factors. When you look at the factors that are driving the inflation rates, number one factor is fuel prices. We saw, because that impacts on transportation costs. And once the cost of moving the items also increase, it will be added to the cost of selling the items. So we don't know where that is going to cap at, because when you also look at crude oil prices fit into PMS price, exchange rate is now a major factor that is driving up the price for Nigeria. So we can't say the worst is over. And when you also look at even the food inflation, There's also some major concern around flooding, as insecurity. We don't think we are also seeing significant improvement in that area. So if we are also not planting when we are supposed to, then there will be nothing also to harvest. So there are major or several pressure points that will still push up inflation rates.
Yeah, you mentioned food, and we see food going from 25.25 to 26.98, almost 2%. That is so scary, and this is something we cannot do without. And this is in spite of the fact that we have it in abundance. We have agricultural potential in abundance in the country.
Yes, but thanks. But it's also good to note that what we are looking at here is the average for the food basket. There are some items that have moved close to 100%, and some maybe by just 1 or 2%. So, so that our viewers are also not surprised that we're talking about 26% on a year-on-year basis, and they can see the price of rice have moved by almost 50%, even in the last 1 year, almost 70%. So this is a basket, and really it's scary. You know, wages are not increasing, and when we talk about real wages relative to what you actually receive, is declining day by day, because companies also don't have that leeway to increase salaries due to a lot of the challenges. Because what happens is that when prices increase, the ability to demand will reduce, which will affect production. And if they are not able to produce more due to lower demand, it leads to downsizing or that is being impacted. There are some inefficiencies that we also pay for that we need to take care of. The cost of bringing things from the north by road to Lagos, if we have a good rail system, it will be cheaper, which means that if we can bring down significantly the cost of transporting food items, it means the selling price would also decline. So these are areas where we need to focus more on. In planting, if we take care of insecurity, that can even be like a quick win. If we can take care of insecurity and people are able to go back to the farm and they plant more, it means that the supply would increase. As supply increases, that may also bring down prices. These are some of the things that can be done to food prices account for about 50% of the total basket. So to bring down inflation rates or to reduce the prices of things, we need to remove some of those inefficiencies. Importing things, even through when you look at our ports, there needs to be a rejig of the operational process, because when you also speak with the professionals in that area, what they pay for demurrage, the time it takes them to even clear those goods, we would eventually is the final consumer that pays for these things. So if while government is trying to stabilize because revenue, there's revenue challenge, trying to formulate policies, there are some quick wins that we can take care of to reduce some of these inefficiencies, which I call it self-inflicted or self-imposed cost. Because if we take care of them, we won't have to be paying for that, and that may reduce the burden in the interim while we work on long-term policies.
Yeah, taking care of the inefficiencies, very important point there, Mr. Abel, thank you. But just briefly now, before we let you go, talking about these baskets, you know, what we use to measure inflation, sometimes there are conversations as in how realistic is it? When last was it updated to ensure that really, because some people say our inflation currently is far above even 50%, if you want to be real. And as you noted, I mean, you look at the bag of rice, for instance, so year on year, you know that it's more than 100% higher. But how realistic and how can we, okay, let me say with how realistic is it? How can we make it really capture the reality when we talk about inflation and some other data in the country?
Okay, thanks. We'll first of all look at when last was the basket constituted. I think, if I'm correct, it should be in 2009. And it's important that when you also now look at what Nigerians spend money on, when you look at Nigerians spend, when you look at the MBS data, breaking it down based on expenditure, you will see that beyond food, Nigerians also spend money on telecom and on data communications. So there's a need to reconstitute that basket to reflect what actually the inflation rate is. There's a need to do that. So I agree that may not totally portray the reality on ground. And beyond that, even if it's reconstituted, there are also items on a year-on-year. So you would see that over time, even the NBS also released data on food prices. So you can go back to trace, when you're looking at food inflation, what are those items that actually accounted for the major push? So that sometimes show more reality than when you look at it based on the whole numbers, because it's a weighted average and it captures, there may be some items that maybe there's a glut and prices have declined. That may be a drag to some of the prices that we feel that have increased when you're looking at the food basket.
So I believe it's the job of the NBS. So NBS, we need to update our basket to capture the reality when it comes to inflation and some other data as the GDP and all of that. But thank you so much for your time, Mr. Ayodije Ebo.
Always my pleasure. Thanks for having me.
Yeah. All right, now we'll take a break, but during that break, we'll tell you about what FBN Holdings has done. They had an AGM yesterday, and this is in spite of the fact that there's a matter in court concerning that. And at that AGM, they agreed that the sum of 17.9 billion naira is set to be distributed to shareholders of FBN Holdings PLC as dividend accruing from the group's earnings in 2022. The board of directors received shareholders' approval. They were there virtually for the distribution of the declared amount at the company's 11th annual general meeting in Lagos. That matter with FBN Holding is in court, and I think they're sitting today. So at the close of today, we should see some reactions to that. Now let's talk about another very important and I know biting issue in the country: the price of petrol and what's going on in the oil and gas sector. Yesterday, we did see Mr. Ajuri Ngelale, the special advisor to the president, announcing that the president says there will be no hike. In fact, it's all over the papers. I'm sure you have not missed it. But this is happening in a deregulated market. How do you balance this? And also, what work, when you look at this, is awaiting the Minister of Petroleum, who should be there? Well, we have joining us to have this conversation Dr. Victor Ekpenyong. He's the Chief Executive Officer of Kenyan International West Africa Limited. He joins us in the studio. Thank you so much, Dr. Ekpenyong, for your time this morning.
Thank you for having me.
So I've just been thinking since I saw that, sound bite yesterday from the presidency that there will be no increase in the price of petrol, and yet I do know that the market, in fact, Mr. Ngelale said it yesterday, it's a deregulated market. So how do you balance it?
Okay, so a deregulated market has to do with the market. The private sector are the one coming in, and in Nigerian oil and gas at the moment, we're trying to see how to build local capacity, to see how we can have our local production. So at the moment, you know that NNPC is still the one, I think they are the one importing in terms of the percentage of the the PMS, the AGO, and whatsoever that is going on is still the NNPC. I know that the NNPC, I think sometime last year, so trying to transit into a limited liability company, which they have fully done that. And I show you maybe what the government, what they're trying to do is to see how to set up how to fully inaugurate the ministries and their ministers. And I believe that when the Minister of Petroleum come on board, I think there are some other policies that will be coming up and which is really going to promote the private sector to drive in, to see how to bring down the price of
yeah,
the
and
PMS.
Unfortunately, at this time, we see our crude production still reducing. Perhaps this would have helped to buffer. And I mean, the president has also said we're not going back to subsidy, But I mean, I wish we could increase our crude production. It will really come in handy.
Yeah, you see, the government, I will commend the NNPC. They are trying a lot. You can see there is a report that came out yesterday that the TMP, that is a trend line for CADOs, will be up very soon, and that is going to add almost 350,000 barrels to Nigerian oil output. I know Nigerians have been struggling to see how to meet up with the OPEC quota, and we have up to 1.8 million to put there into the international market. And we have the TMP down, the Fugodos pipeline. I think they are trying to fix it in some places in the Eleto at Eleme, and which they want to. Shell and NNPC are working on it, and I think, according to the report, is going to be up soon. And the NCTL is also down, and which they are still working on it to see. So the problem of Nigerian oil and gas is not just about the production, it's about evacuation. We're having a lot of issues in the Nile Delta region when it comes to oil theft, vandalism and so on. So now there are production. So if you open up all the wells, if you open up some of these idle assets, well, how are you going to evacuate? So now the only companies that where Nigeria is getting earning from are companies maybe they are operating in IC, APSO, FSO. Those companies, they are laying their pipelines on the water, so there are not interference there. But any companies that operate on land, swamp, where they are using these NCTL or TMP for means of evacuation, they're having issues. And the government is working, NNPC is working tirelessly to see how to fix this issue. And can I show you, based on the report I read, from next month, I think Nigeria should be getting towards 1.8 million barrels.
That's, I don't understand. We can barely make 1 million now, and you're looking at 1.8 million next month. You must know some things there from the background.
No, based on a report that I read yesterday, I think is there in the papers that the TMP will be back. TMP has a capacity to do 400,000 barrels per day. That is Trans-Fucados pipeline. It has, Trans-Niger Fucados pipeline. It has the capacity for 400,000 barrels a day. And most of these, we have a lot of idle assets that are not being in production because of these pipelines that are no means of evacuation. Some companies were even thinking about barging. Okay, how am I going to evacuate? I'm going to evacuate by bringing in barge. When I produce into a barge and transport into a motor vessels and so move. So these are what is hindering Nigerian oil production. And I am very, very confident that based on what I read yesterday, based on the work NNPC is doing, Nigerian production from next one is going to be very appreciated.
I will call you, Dr. Ekpe. I will call you.
It's not a problem.
Next month. It's just about 2 or 3 weeks away.
Okay.
Okay. All right. And I don't know if you also saw that proposal, I think, from the presidency that it may sell its stake in NNPCL and some other firms. Do you think that will make a difference?
Yeah.
More private sector participation?
Yeah, because we have a lot of idle assets. I can tell you this. There are some assets that has issue with communities. There are some assets that have been idle.
The best group or the best person to take care of, because you're talking of insecurity now as a major challenge, is the government. Do you think the private sector can do a better job at dealing with insecurity around the oil and gas assets than the government?
It's all about partnership. So if the government sit down and look at, okay, if we take this, what are the pros and cons? If we let this go, what are the pros and cons? I believe they have experts and they have people that are advising them. So what I can tell is that what the government should focus now on, which I believe maybe with the next Minister of Petroleum, the area we will be focusing on, is to see how to resolve some of these issues that surround some of these idle assets. Because there's some assets like for 3, 4, 5 years are not been in production, and some of them has a high capacity and high, potential to produce some 20, 30,000 barrels of oil per day. If they can resolve these, and if they want to hand over those assets to NNPC now, NNPCLs or whatsoever, because they are proven to be very, very effective in whatsoever they are doing at the moment. So now, if those assets will be handed over to them, or those assets will be handed over to whosoever is going to bid and win, and they are, government cannot succeed. Private sector cannot succeed alone. They also need government, they also need security, they also need community, they also need all these stakeholders to come together to see how to boost our production. So I think when the government fully settle down, and maybe the Minister of Petroleum is appointed, they will know the best route to go to boost production.
So before we talk about that Minister of Petroleum, because we know in the last, I think, 3 administration, the president had retained the position of the minister. But the president promised us that the Port Harcourt refinery will be working by December. Do you see that happening? You read a lot of reports, so perhaps you have seen something.
Yeah, this one is all about report. I was to engage one engineer to work for us in one project. He told me that he's in Warri refinery working. He's in Port Harcourt refinery working. I had to wait for him for like a week for him to come out of there. I was just asking him, what is going on there? He's not in the news. He said, massive work is going on in Warri refinery.
The work in Port Harcourt has been going on for over a year now.
Now that the market is fully, deregulated, I think maybe there is seriousness to see how to boost local production, because you can see what is going on all over the world. You can see the war in Russia, how it's affecting other economies. And I'm seeing an opportunity gap here in terms of Nigeria, because if Nigeria is able to meet their local, consumption, and not just meeting their local consumption, you see the likes of all the West African countries, the likes of the East African countries, all these countries still import petroleum. So imagine when you have a capacity to produce, to satisfy your local, consumption and also export to all these countries, it's really going to boost the economy. So I think maybe they have a plan to see how to boost local production, and not just that. I'm hearing is what one of the engineers I wanted to hire told me. Is they're doing flange, facing and some of those stuff that is going on in the refinery.
So you think it will start working by December?
Based on what we're seeing and what we're hearing.
So who do you think is best to handle all of this? Deal with the subsidy issue, petrol prices, boosting local production, getting the refineries to work. Do you think the president will retain that Minister of Petroleum again, or what do you see?
To be very honest, we have a president now in the country, and they have advisors, and I believe that his advisors might have presented the best option for him. Do you want to retain the position? Do you want to give it out? I think the advisors are doing a good job. And maybe, I'm thinking that maybe this regional tension that is going on in ECOWAS might have distracted, the presidency in one way or the other. By now, we're supposed to have been hearing ministers, portfolios, and some of those stuff. And some of them have been screened. You now discover that ECOWAS tension here and there, Nigeria, and whatsoever that is going on. I think, it's my opinion, maybe one of the things that is delaying most of these appointments. And whosoever is going to appoint is going to be someone that they know is going to perform.
All right, but at least the president will remember that charity begins at home. We need attention first. Thank you so much, Dr. Ekpeyong, Dr. Victor Ekpeyong, the Chief Executive Officer of Kenyan International West Africa Limited.
Thank you for having me.
All right, it's going to be AFEX time after the break. But first, we'll tell you what MTN Foundation is doing in partnership with the Enterprise Development Center. And then we'll head to AFEX. That's right. It's AFEX time now. We can tell you that in the last trading week, which ended on August the 14th, there was mixed performance across key indicators. Turnover rose by 73.53%, closing the week at 6.80 billion naira from 3.94 billion naira in the last trading week. The number of volumes traded went up very high, 82.10%, alongside the number of deals traded, which rose by more than 0.5%. That's 62 in this case, 62.62%, closing at 174 from 107. Very busy week we see for AFEX there for the week ended August the 14th. Now the AFEX commodity index, on the other hand, was down 1.40%, while the AFEX exports index rose 0.08%, closing the week at 229.05 from 228.87. Looking at the volume of contracts traded now, we saw an increase in volume across soybean and sorghum. There you have it there. You can see more details on the screen. Let's look at the price now across export commodities, and we can tell you that the price is for a kilogram in naira. Looking at the prices there, we start with sorghum, and we see that okay, we start with soybean there. Soybean was up 6.81%. That's about 23 naira 44 kobo to close at 367 naira 43 kobo for a kilogram for the week ended. Paddy rice also gained 0.21%. That translates to 7 naira 90 kobo to close at 364 naira 8 kobo. Looking at cocoa now, cocoa, one of the revenue generating crops for Nigeria, was at 1,897 naira 76 kobo after it gained 7 naira 81 kobo. At 0.41% for the week ended. Cashew nuts begins the crops that were in the red. It lost almost 1%, 0.86%. That translates to 4 naira 55 kobo to close at 524 naira 88 kobo. Looking at more from that category is maize, lost a whooping 7.16% to close at 361 naira 79 kobo. And that's it lost 27 naira 92 kobo. That's the price for a kilogram. Wheat, the almighty wheat with Russia uses on the world, is closed at 440 naira after dropping 12%. That's translates to about 60 naira, so closed at 440 naira for a kilogram for the week ended. Then there are the crops that hardly made a move for the week. Sesame leads that with 1,247 naira 57 kobo at the close of trade on August the 14th. And we have ginger also not moving, 989 naira 83 kobo for that date right there. And we have sorghum also, 300 naira, still 300 naira. And if you want more information or you want to get in touch with AFEX, you want to trade on the exchange, you can go to their website, follow them on their social media, get more information. I'm sure they'll be waiting to speak with you right there. Let's take a breather. I'll be back for more markets. All right, now let's head to the money market with Will Ibong.
Good morning.
Good morning.
We've seen the markets yesterday extending losses in the equities. I'm talking about the equities market. They're doing pretty well.
Look at it the other way. It's a good time to get on board.
You know,
prices are down now. A lot of the stocks,
opportunities,
especially the banking. Banking is down. Yesterday, consumer goods was also down.
Dangote sugar,
came down.
It's the right time to jump into Dangote sugar.
Oil and gas still enjoying the subsidy removal. was down, so it's an opportunity.
Yes, it's
Let's
really a
look
great
at it the other way.
opportunity. But we're going to start off with the bond market, the fixed income space, where the bond markets recorded bearish sentiments yesterday. This is due most likely to the low system liquidity we're seeing in the system. The market traded around the 16% levels as the average benchmark rate rose by 27 basis points. We saw improved offers on the 2053 paper in yesterday's trading session. It was around 15, it closed around 15.85% yesterday. Now, analysts expect a quiet trading session today. We've seen the depressed system liquidity from the bond auction settlement, which is taking place today as well, and it's continued to dampen market sentiments. Now, look at the Treasury bills market. It ended on a very drab note yesterday. Average yield was flat in yesterday's trading session. Almost, can you say bearish mix, but just quite flat. But Favor Agbamuche, fixed income dealer at Providence Bank, is there to give us more insights as to what is going on in the markets. Good morning, Favor. It's good to have you on the show.
Good morning, Yvonne. It's good to have you. Thank you for having me.
It's good to have you too. Thanks for having me too, Favor. Now, Favor, we've seen the markets operating in a high inflation environment for some time now. Yesterday, inflation numbers came out from the MBS National Bureau of Statistics, and it climbed higher for July, 24.08%. How hungry would you say investors have been or are for higher yields, saying that inflation is high and then the yields in the market, how is that? How would you be able to tell us what investors are doing right now?
Okay, so we're going to be seeing investors continue to seek for higher yields, seeing that the inflation figures as of yesterday was an 18-year high of 24.08. So we're already seeing this playing out in the bond market even prior to the auction. And then at the auction, with auction levels on the 2053 stopping at 15.85, we're going to continue seeing elevated bids in the bond market space, coupled with the market liquidity, like you mentioned. This drive is also going to be intensified because CBN floated OMO for the first time in a long while. I was seeing the one-year paper closing at 14.49. So we expect that markets will continue to demand for higher yields going forward until significant liquidity may come into the market and may further depress these yields.
I'm still going to talk about the inflation. We did know that the inflation numbers came out before the markets closed yesterday, but was there any knee-jerk reaction from investors? Did it influence sentiments in the market? Did it change anything? Or what do we expect in the near term?
Okay, so prior to inflation figures coming out, yes, we're seeing elevated bids, but for the 2053s, we're seeing bids at a 15.9, 15.85. But further, as the inflation figures were released, we began to see bids at 16% levels. Also this morning, we're still seeing this sustained reaction with bids on the long end at 16.1, 16.15% levels. So we are going to continue to see this owing to these figures that were released as of yesterday.
Thank you so much, Favor Agbamuche, fixed income dealer, Providence Bank, for sharing your thoughts on the program.
Thank you, Yvonne.
So, Ini, just looking at what happened in the equities market, also similar sentiments, persisted in the unlisted equities market. We did see them dropping more than 0.6% yesterday, and they've continued this drop now. We're just hoping
that... I guess it's all market, because even crypto has been neutral. I mean, so I think for over a week
it's more like the investors are taking a risk-off mode right now. They're on a risk-off mode. They're not taking any risk.
Yeah, well,
very cautious.
Let's watch and see what's going on in the world first. All right, thank you so much, Will. See you at 1:30. And but while we are talking of high inflation at over 24% in Nigeria, in the UK, it's close to a 17-month low of 6.8%. Should we all move to the UK? I wonder if Juliana would agree to that. Hi, Juliana. Good morning. Should I say congratulations? Is the worst over at 6.8%?
Inni, I've got to say, I must start with a disclaimer because I do feel very much that I'm discussing #first world problems, talking about inflation data, considering the pretty distressing numbers that we're getting out of Nigeria at the moment. But alas, we've got to talk London data, and you're absolutely right. I think I can say with cautious optimism that it does appear as if the cost of living crisis is finally beginning to ease in the United Kingdom. We've been talking about it now for goodness, about 18 months, but we have had official data from the Office for National Statistics looking at inflation, and quite rightly, as you said, it has dropped sharply to 6.2%. 6.8% in the month of July. That was from, I believe, about a 7.9% inflation reading in June. This is really good news for beleaguered British consumers who have, of course, been struggling with a multitude of issues that pretty much kicked off in February 2022 when the Kremlin decided to invade Ukraine. Inflation was up and it was at a peak of 11.1% in October. One of the reasons why anyone with a large debt in this country, particularly those with mortgages, have been struggling is because the Bank of England have been raising interest rates to try and bring down inflation. At the beginning of the year, the Prime Minister Rishi Sunak did promise Conservative voters and the general public that it was his plan to bring it down to at least 5%, and we are well on our way there. Yesterday morning when we were talking, we spoke about shop price inflation as well, which, according to Kantar, which is a data analytical survey that looks at shopping bills, they're also going down too. So yes, it does appear like a win-win. We're talking about 6.8% and that being incredibly high. However, like I said at the top, considering what's happening in Nigeria at the moment, it's a bit of a tough pill to swallow, I must say.
Yeah, Juliana, maybe I'll just jackpot and come join you right there.
Let's swap. We can swap.
Oh, wow. Good offer. What about this error with the Bank of Ireland? How serious is it? Why is it all over the news?
Goodness me, what a catastrophe it has been in Ireland. This morning, the Bank of Ireland have actually issued an apology, although I don't think many people would want an apology because they've been kicking up a storm in Ireland. All you need to do is look on social media and your timeline will be flooded, seeing people across certain cities in Ireland queuing up across ATMs because there was a technical glitch. There was a technical glitch yesterday evening, and if you were somebody that had no money in your account, you were fortunate, or better be careful with my words there because it is illegal, to be fair. They were able to take out up to €1,000, which I believe is about £900, from their accounts. They were able to just transfer that money into another account and take out money. There were queues of, as to be expected, thousands of people across various cities. In fact, at some stage, I think the Bank of Ireland actually had to call in the police to guard ATMs to prevent people from taking out this money, which didn't belong to them. Like I said this morning, Bank of Ireland have issued an apology and they have reminded those who have taken out the €1,000 that didn't belong to them that it will be debited from their account at some point. So very interesting story. Some people got the luck of the Irish yesterday evening.
Luck of the Irish, but I'm sure they'll be caught. There's data everywhere, Slovakia in Africa and all of that. But, I mean, what a thing to happen to a bank. But thank you so much, Juliana. We'll talk to you at 1:30.
Talk to you then. Thank you.
All right, let's head to the crypto space now. I don't see any luck coming from there. It's still the reality. You don't get £1,000 or euro for doing nothing. So we see the numbers are still in the red. Bitcoin is still at 29,000. In fact, has even lost some of its gains right there. It's now 29,094. Lost also its dominance. We see that now at 47.8%. Dominance in the markets also red. I hope we can get success today. We tried to speak to him yesterday. Ethereum is also down, still down marginally like yesterday, but when you consistently marginally down, then you know that something is wrong. 1,837.17. Let's look at, I think we saw the sentiment there, you have it, neutral. How can the market be neutral for over a week? How can? I don't understand it. But let's look at the prices now. There you have it. Bitcoin is down. Ethereum is down. BNB is down. Cardano is down. Even our XRP that has been escaping, that negative sentiment has finally been caught in that web. It's down more than 4%. Let's see if we have success. Success, good morning. We couldn't talk to you yesterday, but I hope we have you on today. Can you hear me?
Yeah, I can hear you. Good morning.
Great. Thank God for that. So the market has been so dry for over a week, staying on neutral. That's just so heartbreaking. Any possibilities, anything that can move this market one way or the other?
Yeah, like I was about to say yesterday, the last time I was on the show, I predicted that the market was going to come to the level of 30,000, and currently we're experiencing a strong resistance level. So talking about what could drive the markets, in short term, I don't see any possibility of that. But in long term, in the end of the year, we are going to see a possible approval. SEC is going to approve Bitcoin to be listed in the ETF in the US and be traded, and also Ethereum upgrade and Bitcoin halving as well next year. So the Bitcoin halving is going to make Bitcoin gets more scarce, and there's a whole lot of sentiment around Bitcoin halving. So that should be around April next year. So I think this is going to cause more scarcity and increase in supply. So these are three factors, are the possible factors to drive the increase in price in these crypto assets. But for now, I think we just experience sideways movements in the markets. And if the SEC continues to raise interest rates, we might experience more down in the markets. But for now, I'm just neutral and hoping for the SEC approval, the Ethereum upgrade, and the Bitcoin halving next year.
So the downgrade of some banks in the United States, can that have any effects on the market?
If it's going to have any effects on the markets, it's going to be a positive effect because it's like a counter industry, the crypto and the banks. So if there are more downgrades in the bank, I think it's going to affect the prices of these crypto assets positively, but not like a big increase in price. So these three factors I mentioned earlier are the factors I think can will be catalyst to see a big increase in price in the crypto assets.
So what are investors doing now, Success? Are they just watching? Nobody's buying, nobody's selling. What are you guys doing?
Not financial advice anyway, but I think if you're experiencing the markets, this is the right time to accumulate, because even if there's going to be a downward movement, I don't think it's going to be a significant one. So let's say from now to 6 months is a great time and great opportunity to accumulate. For the newbies, when Bitcoin was 50,000, 60,000, they waited for opportunity. Now, most of the markets are down 80%, 75%. So I think it's a great time for me personally to accumulate. So I'm currently accumulating, but like I said, it's not a financial advice.
All right, Success, thank you. But obviously that is not a financial advice. That is just Success sharing what he's doing. Thank you, Success Chibuike, founder, Biscasi Crypto, for your time this morning.
Thank you.
All right, so that's where we draw the curtains on Business Morning for today. Thank you so much for being a part of this midweek edition. I hope it was worth your time. You can watch it anytime you want. Just go to youtube.com/channelsweb. Check for Business Morning, watch old episodes so you don't miss any information. Information is life, you know. So that's it. 1:30, Will Ibong will be here to give you update from the world of business. I will see you at 10 p.m. during the stock market report. I hope I can report a positive, a bull market today. I look forward to that. But that's it. Thank you so much. Go out there, make some money. I'll see you later. I'm John McClellan.